The market thinks that we are going to see 90 basis points of cuts from the ECB this year. Does that sound about right to you? You've been much more cautious in the commentary that you've been delivering recently.
I think the cuts will determine by the future, and the prospects now may be ready for 90 points, but I could imagine a number of other scenarios which have not been taken into account. And for me, the main risk it's the geopolitical risk around the Red Sea. This may or still may explode, and if it does, the 19 basis point may be much too high, if at all.
If at all. How big a risk is there that the ECB does not cut rates this year?
Well, the risk is determined externally, but what we can see is that for the moment we don't have a peace plan, we don't have a solution. As a result of it, the conflict will simmer on and may explode at one moment. And if it does, let's assume we have one tanker stranded in the Gulf of Hormuz, the oil prices would shoot up tremendously. The chances are slim, but the reality is there, which would, how to say, undo this one. How big the probability is, I'm not a specialist in foreign affairs, but I see it quite closely that it is a real reality.
Good morning to you, Governor. Is that the difference between the view that you take and those on the Governing Council who would like to see cuts coming in the spring or the summer? Is it a different assessment around the probability of escalation in the Red Sea? Is that what divides you?
This may be one part of it. The other part of it has to do with our experiences on wage growth. Compared to the south, the north, starting in the Netherlands, Germany, Austria, we still have a much higher wage growth, and the wage negotiations are not yet finished. They typically finish sometimes in spring, and so far the growth rates have been quite high. And in particular, I take now my home country, but it's not only one. You had an increase in the pensions of almost 10%. It's of course difficult then for workers to do with wage demands less. And having this amount there, then the question is, how does this translate into price growth there? And here our elasticities of the past have been between 0.3 and 0.5, but they were based on a much higher than existing productivity. Productivity is practically nil in Germany, Austria, but also Netherlands. As a result of it, it would translate into much higher price growth rates. So this is another area where a lot of uncertainty exists with regard to the outcome and what it means for the prices.
So wages and a lack of productivity important to consider as well. We talked to BNP Paribas earlier on, Governor, and we were having a conversation about whether the ECB has a preference for the pace at which it cuts rates once it starts. Do you have a preference for cutting and doing it slowly and gradually, or cutting and then doing it quite quickly? Where does your thinking go on that subject?
Well, it has to do, my preference has to do with the risk assessment. What does it mean if we cut now and we have, for whatever reason, to re-increase the interest rate again, compared to a scenario in which we wait, we're perhaps a bit late, but then cut earlier. And my assessment is that the second one is a much less damaging scenario, that you cut a bit but faster later on than to cut once or twice and then have to re-increase it. And this determines my view why it's too early to talk about cuts. We all hope they take place. Don't misread me. We all hope that cuts take place, but we have been wrong in the past, and for this reason we are a bit more cautious now.
So would you then be voting for a 50 basis point cut at the first cut when your conditions are met and when you're happy those risks have been alleviated?
If and as we would have the green light for cuts, and if and as we assess that we were late, yes, I would be willing to have a larger cut once, followed by others, whatever it is, if the conditions are there. I think this is a better way of doing it. Albeit typically on the way down, it's also better to have continuous cuts than having large cuts, but I wouldn't exclude them.
What happens if the Federal Reserve cuts before you? What happens if the Federal Reserve would hike? How would that affect your decisions?
Well, if the Fed changes its policy hiking, then I assume it will have the same conditions like in Europe, because these currency areas are interrelated. So this would then also mean that we have to rethink it. But typically, the Fed over the last years has always gone first, about by half a year. So I would assume, ceteris paribus, as things are, that we would also follow with delay.
Okay,
but, of course, the conditions out of moment.
Governor, would you be prepared, very briefly, to go before the Federal Reserve? Would you be prepared to see ECB cuts before the Federal Reserve cuts?
This depends on the circumstances. At the moment, I don't see circumstances which brings us to cut before.